I'm changing how I invest my money. Because of AI, imagine you're holding an ice cube in your hand right now. It looks solid, it looks safe, but the second you close your fist around it, it starts melting between your fingers, and by the time you realize what's happening, half of it is already gone. That ice cube is your money sitting in a regular savings account while artificial intelligence quietly rewrites the entire rule book of investing. Right now, while you're watching this video, hedge funds are using AI to execute trades in microseconds. Banks are using AI to decide who gets loans and who doesn't, and the average person is still investing the exact same way their grandparents did in 1985. That gap right there between how the top 1% are using this technology and how everyone else is ignoring it is about to become the biggest wealth transfer of our generation. So today, I'm not just going to tell you that AI is changing investing. I'm going to show you exactly how I'm changing my own portfolio because of it, and more importantly, the 3 traps that are keeping regular people broke while the smart money quietly gets richer. Stick around, because trap number 2 is the one that's probably draining your bank account right now, and you don't even know it. Let's talk about Alex. Alex is 32 years old, works a solid 9 to 5, and honestly, Alex is smarter than most people when it comes to money. Alex has heard all the buzz about AI in the last 2 years, so Alex does what most people do. Alex opens up an app, dumps $500 into some flashy AI-powered trading bot that promises to beat the market using machine learning, and then sits back expecting to retire early. 3 months later, Alex checks the account and it's down 11%. Sound familiar? This is trap number 1, and it's called shiny object investing. Now let's bring in the advisor to break down why Alex just lost money chasing a headline instead of a strategy. The advisor sits Alex down and says something simple. Alex, AI isn't a magic money button. It's a tool, and tools are only as good as the person using them. Here's the data that proves it. A 2024 study on AI-driven retail trading apps found that the majority of these so-called AI bots marketed to everyday consumers underperformed a basic S&P 500 index fund over a 12-month period, mainly because of high fees and short-term trading strategies designed to generate commissions, not returns. Meanwhile, institutional investors, the actual smart money, aren't using AI to gamble. They're using it to do 3 boring, unsexy things extremely well. Pattern recognition across decades of market data, risk assessment across thousands of variables at once, and portfolio rebalancing without human emotion getting in the way. That's it. No magic, just math, done faster and more consistently than any human ever could. So here's the real lesson Alex learns, and the one I want you to take away right now. AI doesn't replace the fundamentals of investing. It amplifies whatever strategy you already have. If your strategy is gamble and hope, AI just helps you gamble and hope faster and lose faster too. But if your strategy is sound, AI becomes a superpower. That distinction is exactly what separates the top 1% from everyone else. And it leads us straight into trap number 2. Trap number 2 is what I call the illusion of free advice. Picture a vending machine. You put in $1, and instead of getting a snack, you get a recommendation on which stock to buy. Sounds harmless, right? Except that vending machine was built, stocked, and programmed by someone with their own interests in mind. This is exactly what's happening with a lot of AI-powered robo-advisors and free financial chatbots flooding the market right now. Alex, being a normal, trusting person, starts asking a free AI chatbot for stock picks because, hey, it's free and it sounds confident. But here's what most people don't realize. Many of these platforms are quietly funded through payment for order flow arrangements or partnerships with specific fund providers, meaning the unbiased AI advice you're getting might be subtly nudging you toward products that benefit the platform, not you. The advisor's take on this is simple. If you're not paying for the product, you might be the product. That's not a conspiracy theory. That's just how business models work. Now let's get into trap number 3, and this one is the deepest. So stay with me because this is where fractional reserve banking and hidden taxes come into play, and I promise to make it stupid simple. Picture a swimming pool that's supposed to be completely full of water. That water represents all the cash that's ever been deposited into banks. Now imagine that for every 10 gallons of water that gets poured in, the pool operator is only required to keep 1 gallon in the pool and is allowed to lend out the other 9 to someone else. who then deposits it into another pool, which then lends out 9 more gallons, and so on. That, in a nutshell, is fractional reserve banking. It means the actual amount of real money sitting in the entire banking system is a fraction of what everyone thinks exists. This is precisely why inflation quietly eats your savings every single year. It's not an accident. It's baked into the system. When your bank offers you a high-yield savings account paying 4%, but real inflation is running at 6%, you're not gaining wealth. You're losing it, just slower than everyone else. And the government still taxes the interest you earned on that shrinking pile of money. That's the hidden tax nobody talks about. Inflation combined with taxation on returns that don't even keep pace with inflation in the first place. Alex thought a savings account was safe. The advisor points out that safe and smart are not the same thing. Safe can still mean slowly lost solution. So what does the top 1% actually do differently? This is where it gets exciting, because this is where AI stops being a trap and starts being a genuine advantage if you use it correctly. The wealthy don't chase AI stock tips. They use AI-adjacent tools and old-school 1% logic together to build systems that work without them lifting a finger every day. First, they automate their foundation using instruments like treasury bills or T-bills, which are essentially IOUs from the US government that currently pay a reliable, low-risk return, acting as the concrete slab under the entire financial house. Second, they use low-cost index funds, the same ones Warren Buffett has recommended for decades, because historically, the S&P 500 has returned around 10% annually over long stretches of time, and no AI trading bot with a 30-day track record is going to convince a serious investor to abandon nearly a century of proven data. Third, and this is where AI genuinely shines, they use it for what it's actually good at, aggregating massive amounts of financial data to optimize asset allocation, meaning how much money goes into stocks, bonds, real estate, and cash based on their specific age, risk tolerance, and goals, updated continuously instead of once a year during a rushed meeting with a human advisor. This is exactly why I'm changing how I invest. I'm not using AI to pick the next hot stock. I'm using it to stress test my portfolio allocation, to catch blind spots in my diversification, and to model out different economic scenarios faster than I ever could manually. The advisor's final piece of 1% logic is this: automation beats emotion every single time. When your investing strategy runs on autopilot, boring, diversified, and consistent, you remove the single biggest threat to your wealth, which is your own panic during a market dip. Action. Here's the uncomfortable truth. The gap between people who understand this shift and people who don't is going to widen faster in the next 5 years than it has in the last 50. AI isn't coming for your job someday in the future. It's already reshaping who builds wealth right now, today, while you're watching this. Alex almost got left behind, chasing shiny objects and trusting free advice that wasn't really free. Don't be Alex. The people who win this decade aren't the ones with the most complicated strategy. They're the ones who understood the traps early, automated the boring stuff, and let time and consistency do the heavy lifting. If this video just changed the way you think about your money, even slightly, that means you're exactly the kind of person this channel was built for. Hit subscribe to the 1% Logic right now, because every single week I'm breaking down exactly how the wealthy actually think, not the fluff you see everywhere else, the real mechanics behind real wealth. And here's the thing, the algorithm doesn't guarantee you'll see the next video unless you're subscribed, so if you skip this step, you might genuinely miss the exact video that changes your entire financial future. Don't let that be the mistake you look back on. Subscribe now, turn on notifications, and I'll see you in the next one, where I break down the investment account the top 1% don't want you to know about.